Friday, May 19th, market analysis, Stan Ehrlich. Good morning. 11 minutes after 10 o'clock California time. There's still 2 hours and 45 minutes approximately until the market closes. We're a little bit past midpoint day on a Friday after very strong Wednesday, Thursday price action and major breakouts involved. In fact, the QQQ got overbought the last 2.5 days now. Let's get to that in a moment. You guys know I start out with the stock market indexes all the time and usually the spider, and here we are. So we have new highs all the way since last August, today and yesterday. But we opened at the high of the day, basically. Started a slip, and it actually got lower than yesterday's close, excuse me, and has now bounced back up somewhat. We could, without doing any damage whatsoever, because we're close to overbought, slip a little bit more in the next day or two, and that could be down to 414, 413, 415 maybe. And here we are at 418 and a half. No big deal. I just don't want to have a bearish engulfing price action today. In other words, getting below yesterday's lows. We've already seen new highs. And I hope that doesn't happen. I don't think it's going to happen, but a little bit more of a downside correction, a little profit taking may not be much of a surprise. We've got what I wanted, talking about the last week or two, and that's major upside breakouts, new highs since last February's high, and it's stuck. And today we're having maybe a little problem. We're down only half a point, which is nothing. So let's take a quick peek at the way it's moving at the moment on a fine-tuned basis. The 1-minute chart, you can see that we opened a little bit higher than yesterday's high, and I'll bring this up full screen for you. We'll just show the 1 minute for the S&P. Opened a little bit higher than yesterday's close and didn't do anything. Ended up with some resistance to stop the rallies, and then we started to break down a little bit and succeeded in dropping off to a low so far of around 1730. No particular reason that's important. Bounced up, big deal, and then challenged the low, but did not make a lower low. And on this last rally, we're getting stuck between a rock and a hard spot. It didn't make any new highs of consequence. So we're slipping tiny bit the last few minutes. Making minor or new lows for the day would put it a little closer, of course, to a bearish engulfing, but that's still a long ways to go below yesterday's low. You've got to get down all the way to here. And of course, we're up here. So possible, not particularly likely. Now, DIA got one tick above yesterday's high. It's above yesterday's high. That qualifies for a higher high. It's the minimum you can have. And it is the weakest of the group, so it has gotten already close to yesterday's lows, but on the daily data chart here, you don't have any lower lows. It is fiddling around with this resistance, old resistance line, which has been, on the average, not too accurate, but stopping a lot of these rallies, and that goes for the last month and a half or so, including a couple of bearish engulfings that are at higher prices than we are right now, although it did make a higher high after the sell signals. So they didn't work. But the overall move has been toppy-ish. I don't know. I think it's going to explode to the upside very soon. It could see a little bit of a dip more, just like the S&Ps. Hey, what about the Qs? This is the one that's the most important one, in my opinion, at the moment. The QQQs got overbought on Wednesday. Here's the daily data chart, and I will rescale this because it's goofy. Just a moment. And come on. And here we go. So it barreled through up to and above some major resistance areas. We're talking about the bearish engulfing ER sell signal we got on the exact high day on August 16th. That has been overcome on Wednesday. We closed a little bit above that. We roared up on yesterday's markets, closing much stronger. Decisive follow-through breakout. And today, Friday, it made a higher high. Pardon me. It's a little bit lower on the day at the moment, not that big a deal so far, but it's overbought. And that means it deserves to have a correction. So could the S&P, so could the DIA. Everything is set for a minor dip to the downside. Where could it come down to on the Qs? Well, the blue dotted line is the old high. That's the first thing that's the closest. Didn't quite get there today's lows. We'll see what happens. But it also could dip down to about 330.5. That heavy duty yellow dash line is very significant historical and now support. Used to be resistance, stopped around that line before, and you can track it backwards a lot more. So that's it for indexes. Maybe correction, still very bullish, looking very much forward to much more strength. And we're going to go to the futures markets now. Here we go. The E-mini, of course, is the spider, so my comments are almost exactly the same. And I'll just skip. We're at the bond futures contract now. I am looking back a significant number of years, back into the early part of 2015. So what have we got? A heck of a lot of bottoms in the price range where it is, I think, doing it again. This is one of the major reasons why I've been talking about a major bottom in the interest rate futures. It would be very, very bad if it were to drop below the lows that we saw last October. Now, details. On a short-term basis, we gap down and short-term support last month and a half is broken, but it's not changing the overall trend. Our only major bull trend line has already got 3 points on it, and the fourth one could be a little bit of a dip down to 125. Yeah, about 125 to a little bit higher in the next day or two. That doesn't concern me. It still looks bullish long term. Plus, we are almost oversold. Any low lower than today's low, especially if it happens very quickly, is probably going to put us in oversold prime condition for the beginning of a rally, coming close to support levels of various types, trend line and horizontal, and a gap to close above today's high. Remember, gaps are like a black hole in space. They tend to suck the price action back into it again. We saw a lot of them in the stock market and indexes in the last many months. Okay, so very interesting. I'm getting ready to hopefully get a buy signal in the bonds. Next chart, 10-year notes. Just broke support today, also gap down. It deserves a little bit more of a correction, just like the bonds. I have no change of commentary except the price levels that are involved. Next chart. Crude. We have a bearish engulfing based on a very small range of yesterday and not particularly overbought, but the trend is down. We already broke a significant support area, but we did come back above the first red barrier and tested the one that was at a higher level, and that stopped the rally. And of course, that was several weeks ago. It came all the way back down, tested the previous lows, and bounced off of that. So sideways for a few days here. I think it's going to start to break down again. The trend is your friend. Next chart. We got heating oil. Pretty much the same commentaries. Support levels have been broken periodically. Only the last historically very profound support area is left. It was already tested only a few weeks ago. And we could be with a bearish engulfing based on a very small range of yesterday. Something's fishy about that price range. We could be starting the way down to break that major support area. By the way, when it does break below 2.1316, give or take, that could be a very big down day. Momentum traders would love that kind of thing. Major bearish or bullish breakout type people, traders would tend to love that kind of thing. And it certainly would tend to cement the intermediate to long-term trend down. But you got to watch out to see if it gets overbought and oversold in the process, which would not be unlikely. That's often what happens when you get breakouts, but it doesn't stop it. You have the overbought or oversold condition for another couple of days, often. Next chart. Natural gas. Whoa, thank you. We had a buy signal green just a few days ago, 512. The low of the the low of the day, the next day, was almost exactly on our bid. We never, maybe a few minutes, had a loss. This popped back up again, closed on a firm note. The first day we were in it. Second day didn't do too much. Third day it didn't do too much, although it did start to come down a little bit. Yesterday it didn't do too much, and zoom, we have a upside classic breakout. 1 second, let me do a Control D and Control R. See if I have a refresh, which should not be the case. Yes, it is. I apologize. There was something wrong with the database. Yesterday was the breakout day, and today's just simply a little more follow through. Oops. Let me see if I should make a comment change on this, because that seems like the same problem. No, really can't make a change. I'm going to pass the rest. That's okay. Sorry. Here we go. New lows for the trend, and I'll do a Control R here. So something's wrong with this data feed. Yesterday was the downside follow through, bearish breakout, oversold. And today we're still at the lows, oversold, and popping back up to resistance. I think we're going to see a turn very close to where we are, back down again, and new lows. Turning a little bit more bearish on gold. Warned for weeks that the gold, silver, and platinum looked like they were topping out. Let's look at unbelievable silver. Watch this. And I'm going to correct that symbol from yesterday. I'm at range, price range from yesterday. We had a double top formation, which had both highs being bearish ER sell signals, and therefore turning red real time during the day before the close, giving you the signal the day it happens. On May 10th, 3 days after the last sell signal, we had a complementary, I quote unquote, joke, sell signal, and had a collapsing market the next day. Next day down even more, got oversold, bounced a little. Next day, new lows to the move, new low close. Next day, 2 days ago, pretty much sideways, still oversold, looking for the beginning of a rally somewhere pretty quick. Yesterday, lower lows again and a new low. And today we're starting to see a minor rally, new highs for a couple of days, new high close for the last 3 days. I don't think there's going to be anything to this. I would expect the possibility of a 24.9 rally high area, maybe less. And for it to turn right back down again very soon and get down to its minimum downside objective, which is 2290-ish. Hasn't gotten there yet, but almost, I would say, 2/3 of the way. And from the breakout day only 4 or 5 days, 6 days ago, that's pretty quick. Next chart. Almost a downside breakout, not quite on this, not so good double top on platinum, but it's pretty much there. Now, a much broader one might be talked about. The first high was our bearish engulfing on the top of the platinum market to the damn day, and the bottom of the market since then was also a bullish ER engulfing. Can't get more accurate to the day. And a few just for fun back several months ago. Sell signal here worked for a day or two, not very well, but the formation and the way that it's been acting is pretty iffy. Looking for a downside breakout. Next chart. Bullish engulfing 2 days ago in natural gas. It had been oversold for a few days, so no surprise we're starting to rally, and no surprise we got a bullish engulfing, which I love. If it continues to be the lowest low today, it put us in jeopardy somewhat with a fairly good break, but it only came down to and a little lower than our entry based on the bullish engulfing signal on May 17th. Remember, ER1 gets in the day it turns green. So we never miss. We may lose some money. That may not be a good signal, but at least we're in the trade the day of the green or red. And if everything works out good, we're in the day that the market turned, period. ER3 gets in on a retracement where these red and green dots are, and it's a calculation based on a variety of factors. And we did get in today, and it is a tiny bit higher than our entry, and the initial yellow stop is not hit. We're making a tiny bit of money at the moment. Let's see what happens. So ER3 is in, ER1 was in, or is still in. Let's go. Let's see what rally. Let's see what happens. High grade is now soybean oil, oversold 4 days in a row, and dropping off to a low even lower than we bounced off of yesterday, new lows, of course, and that was the lowest low since October. We are now at the lowest levels since July of last year. Historical support is coming extremely close. That would be around 1280, 2, 3, 4, 5. And we're at 1319. We're oversold, and we could have a little exhaustion phase, a day or two, in order to reach that support, or turn around a little bit higher, like any day now. I'm bearish, looking for test of historical support, maybe a bounce, and lows that are lower after that. Next, what about bean oil? Oversold again. A little bit of a bounce already today. I like what I see. Just going to catch something here. Okay, minor corrections don't change anything. Next chart. Soybean meal. Excuse me, downside follow through, downside breakout. New lows again for quite a while, since December 5. And what can I say? We're testing historical major support, and we're in oversold conditions. I expect a little bounce, but the trend could have changed. I think it's going to make new lows again and again. I don't see any major turning evidence here so far. Next chart. Corn. We had a couple of buy signals a few weeks ago. They didn't work out very well. We made a little bit of money for a day or two in the first buy signal, and probably a loss, a small loss, on the second buy signal, maybe washing each other out. Now we have just a moment, rally starting because of oversold conditions. We already this morning came up to resistance. It appears we opened, ran up there, and then came back down again. That's probably what happened. So that's it, probably. Today, it was all in one day. Tested overhead resistance, not historically important, that much. And I expect to see new lows any day. Next, we are in wheat, obliterating my buy signal, which was good again for a few days, and almost making new lows for the trend. I like what I see from the standpoint of a possible double bottom, but that's not happening yet. Do not get carried away thinking it's going to happen. But if it is, we're going to stop going down right around here and start to turn back up. We are very close to oversold. Let's see what happens. But I can't help to be bearish with the idea that, hey, there might be something here, but that doesn't happen most of the time. The double bottom is probably not going to happen. Next. Resistance is broken. A double or triple top in live cattle is gone. And we have a new high close. Cattle's in a bull trend. No pun intended, I suppose. Next, Miss Piggy, new low close. Buy signal worked only for several days, but again, it worked. Didn't have a major turning point like we have seen before. Back here at a major important high, August 16th of 22. So almost oversold again. Not unusual in a bear trend. Remember, we don't get big rallies, and we do see occasional swift declines, breakouts to the downside, like today, that end up getting oversold again, and then again, and then again, and so on in a bear trend. So normal, but don't go selling markets that are in oversold conditions. Next, OJ, neutral RSI, trend is up, tested the apex of a previous pennant that did break out halfway to 2/3 toward the tip, which is typical. What is not unusual, and I haven't actually seen it for a long time, is for this little old bull trend line, bottom of the pennant, being tested again, and the top of the pennant, which is a bearish resistance line while the pennant's forming, That's tested at almost the exact day they crossed. That is unusual, but I have seen it before. Next, bearish engulfing worked for only one day a few days ago. We have a new high for the trend in cocoa. Overbought though, probably going to go up a little bit more and have another little twitch to the downside. Trend is up, bullish. Next, sugar. Pass on the sweet. Next, S&P 500 currently down 51 ticks, drifting just a little bit lower on the day. Watch out. This could be beginning of that dip I'm mentioning. If we get stronger and close on a strong rally, challenging the highs of the day, for example, or of course making new highs, that would be very, very good. Except for, oscillators might cause more overbought conditions. Have a great weekend. Thank you.